Hello, Brambila Capital here, and just a quick update on my stock portfolio. Today is October 8th, 2022. Yesterday the market closed and I lost 3.45% of my portfolio in Fidelity, which as you can see is $452.88. And as you guys can see, total year to date losses would be $4,265.41. And as we should note, that unless you accept the losses, they're not really losses. Obviously, my portfolio is down, and sometime in the future it'll be up. And just because it's up and it's green doesn't mean that those are my gains because I haven't accepted them yet. So that's a very good thing to note. And here is my personal returns year to date for both my individual and Roth IRA accounts. It's minus 30.59% total for the life of the available data. Starting July 19, 2021, I've lost 15.13% of my total um, portfolio for both accounts. And for my Robinhood account, I've lost 30.19%, which totals $1,238.61. And the reason why I'm excited that the market's down is because this is the best time to buy. Obviously, it doesn't feel great seeing your portfolio down, but the reason I feel excited is because there's more opportunity when the market's down. So I have two quotes that I want to mention before I continue. One is from Bank of America's Keith Banks. He says, "The reality is it's time in the market, not timing the markets." This is why I'm not worried about the positioning of my stock portfolio, because in the long run, if you dollar cost average, especially the S&P 500, the S&P 500 ever since its inception has always trended upward. So that's a very important thing that an average investor like me should know, is that it's not about what time to get in the market, what's the best time, because no one knows. So it's more about dollar cost averaging on the way down and dollar cost averaging on the way up. And over time, over the years, you will see the benefits of your investments. So another quote that I wanted to talk about was Warren Buffett's quote, which says, "Rule number one, never lose money. Rule number two, never forget rule number one." Warren Buffett. So this is a very obvious quote, especially in my case, that my portfolio is in the red. And if I accept my losses and I panic and I withdraw my money, that wouldn't be smart, because I know in the long run my portfolio will be up. And even then, if I don't accept my gains, that means I haven't gained anything yet. So it goes both ways. And it's just a thing that I had to understand, that these losses aren't really my losses until I accept them. And the gains when I was up last year, they weren't mine until I accepted them. So now the reason I mentioned those quotes was because, as we see, the S&P 500 has gone down 2.8% as of October 7, 2022. But the thing is that one has to look at the stock market, especially the S&P 500, or if you value invest and pick stocks by doing your research, you have to look at things in the bigger picture. So as we start zooming out and getting a better vantage point, we start seeing that it's looking less and less scary. So as we zoom out a year from today, or as we zoom out 5 years from today, we start seeing an upward trend in the long run. And if we go to the S&P 500's inception, which was October 15, 1982, and we start slowly but surely going up over the years, we start seeing a very common trend. This is 2000, this is the dot-com bubble right here. And as we start going towards 2008, this is the housing market crash and recession. And as we start going up, we have a very long bull market run. As we start approaching 2020, we see this dip, which was COVID. As we start approaching 2021, this is the peak. And where we are now, we're slowly going down into a bear market. But the important thing to note is that the S&P 500 over the long run, if you dollar cost average on the way down and on the way up, it will trend up. And that's why that quote is so important. The first one that I showed, it's not about timing the markets, it's about time in the markets. Because if you stay in the market and you dollar cost average intelligently, especially the S&P 500, you will most likely trend upward. And since its inception, the S&P 500 has always trended upward. And that's it. Thank you guys. Like and subscribe if you want to support me. See you guys next time.